Welcome back to It's Only Money here on Real Radio 104.1 with financial advisors Tammy and Scott Brown of Edgewater Family Wealth. EdgewaterFamilyWealth.com is the website where you go to get a hold of these gentlemen. I'm Ryan from the Monsters in the Morning, and good morning, gentlemen.
Good morning.
Happy Sunday.
Happy Sunday indeed. I hope you enjoyed your Memorial Day weekend, fellas.
Yeah, it was great.
Fantastic. Good times. It's always good to have a short week and a long weekend.
Yes.
I'm in favor of that as an ongoing thing, in fact.
A lot of people think that a 4-hour workday is actually more efficient. If we bumped it all up to four days, but bumped it up to 10-hour workdays, the other countries have done this, and studies have been done that shows that you get more productivity out of people. Because I'm a big believer, especially working for a big, major corporate enterprise. A lot of people aren't fully working the full 8 hours.
What? You say people in their cubicles are looking at their phones and checking pictures, and they're on Face. You're saying that's happening?
I am 100% saying that's happening.
Yeah, I'm actually doing it right now. I'm barely even
Can you
listening
please
to
pay attention to the show, at least, Scott? It's your show.
I have to see how many likes I get.
Do you find that, though, with your office where you're like, yeah, we could, I mean, obviously you have the market, so you have to be aware and up and on all of it. But like, you could probably fit most of your work into about 4 days.
Yeah, I mean, I think anybody could do that if they're ultra efficient. I mean, it's there's so many variables to the workplace. I think to say one size fits all is wrong. I think that the hybrid workplace is probably here to stay. Some days I will spend the morning at home because it's quieter. And I can get more done. Do people who show up and try to let 8 hours pass by doing as little as possible? Sure, some people do that.
Yes.
Not everybody, and I would argue not most people. I think people are largely conscientious, but sure, do they look at their phones? Do they see what the camera is showing them at the house? What is their dog doing? There's an element of that, and again, people checking social media or whatever. I mean, yeah, that stuff goes on, but I think by and large, it works. What I would say about the hybrid workplace is, from my experience anyway, is at least in our business, we can be flexible. Like Tammy manages money from the house sometimes. Like he has a computer set up. If he's got something going on or somebody needs to come fix something at the house, he can stay there and do his thing. If we got a full office of people and there's a bunch of stuff going on, and he just wants some quiet so he can do some trading or do some brainstorming, do some of his magic, if you will. He will. He has that option, and I don't care. The bottom line is, if you're an employer, you want the work done, right? Get the work done. I don't really care how you do it or where you do it. With that said, I also think, especially like in your business, you're a creative person and you work with a creative group over at the Monsters. I would say that's a little bit true of a lot of jobs because there is a creativity to that spontaneous conversation. You pass somebody in the hall and you're like, hey, were you working on that thing? Yeah, I was working on it. What do you think about this? What do you think about that? That's not going to occur if you're not in the office.
Yes, I did work from home for a little bit with the Monsters streaming in. I hated it. Like,
yeah.
I like coming here and especially now that we have the studio kind of painted and it feels like a creative space and the interactions easier to work with.
Yeah.
And if I was at home, I would definitely like get distracted by the dog, full ADD. I'll go to the fridge, get something to eat, so it works out for me. But like someone like my fiance, she's a graphic designer, like much like Tammy, you just use a computer for your job. You can set up a computer anywhere you go, and they're like, you got to come back to the office 2 days a week, and she's like, why?
Yeah.
that computer's right here too.
Yeah, I don't know. I think there's some old school mentality that says I'd like to lay eyes on you and make sure you're at least doing something.
Yeah.
I don't know. Again, if the work's getting done, and when you think about the time somebody like your, with your wife, the commute time, right?
Yeah.
If you lose some people commute 2 or 3 hours to work every day.
Yeah,
Think about the lost efficiencies there. The gas. What does that mean? I don't know if this is right, but I feel like I remember somebody saying like halfway through the heart of COVID, where nobody was going anywhere, that the CO2 emissions dropped dramatically.
Yeah.
The environment was kind of cleaning itself
Venice
up.
looked amazing, which apparently is mostly a polluted mess with nobody there. The water's like kind of cleared up.
No, yeah, I believe it because less cars on the road. You talk about conservation and environmental friendliness. I mean, that's one of the outcomes. Of course, that didn't last very long. People are back out on the roads in mass right now, I've noticed.
Is it a conspiracy theory, though, to say like the reason gas prices went crazy through the roof was because the oil companies lost a ton of money during that time because no one was commuting, so they're just trying to recoup their profits by just raising up the prices?
I mean, listen, oil companies want to make a profit. So when your supply drops by 12% like it did with the Russian incursion into Ukraine, you have multiple buyers bidding for the same, like, because Europe wanted gas from us, we wanted gas from us, people want gas from Canada, and now they're like, well, I could sell it to you for $50 a barrel, or oh, you'll give me 60, and then Europe says we'll give you 70, and then Iceland, whatever. Iceland's a bad choice because they have their own oil, but the point being is there's a lot of reasons.
It's an open market.
It's an open, free market, and they're going to sell it where they get the most money. So, is it a conspiracy? No. Is it capitalism? Absolutely.
I mean, not to forget that. Remember back in mid 2020 when the oil barrel went to negative at some point.
Yeah.
So if it was a conspiracy, I don't know.
They're not very good at it.
They're not very good at it.
These people at Exxon need to get their act together.
Yeah, they're super bad at controlling the entire world. Which
yes,
is,
they're really bad at making a lot of money all the time.
But I mean, the whole economy didn't collapse when we had to work from home. In fact, we did pretty well. Actually,
we did. And again, we could have some, after the fact quarterbacking and say we shouldn't have closed this down or closed that down. Florida, no matter what you think of DeSantis, I think he did an okay job with that. He kind of took a middle approach. Some people thought he should be more aggressive in opening things up, and some people thought he should be less aggressive. I personally, I don't always like the rhetoric that comes out of Tallahassee or Washington for that matter, but the reality is I think each state picked their own path, and some did better than others, depending on who you ask. But at the end of the day, I think as a country, we did okay. I give us a C+.
Yeah, solid C.
Yeah,
overall. With some places getting Fs and some places getting A's.
Yeah.
And remember, there's no right or wrong.
There's no playbook.
Yeah.
What do we do when the pandemic hits?
Exactly.
Yeah.
It's funny though too, and we've obviously been through pandemics as people, as Americans, but just as people through thousands of years.
Sure.
And we seem to just get it wrong every time. So even all the lessons that we've learned right now.
Yeah.
In 100 years, when another pandemic happens, let's hope it's 100 years.
Yeah.
We're totally going to forget.
Oh, we're going to screw
and
it
we're going to screw it all up again. We're super bad at remembering.
Well, it's like stock market drops, right?
Yeah.
I've been in my 36 years, there's been 5 or 6 significant market drops, and certainly some moderate ones, probably a dozen. And people always do the same thing every time. They panic and they sell. And it's like, we've been telling you, this is the 10th time now. Don't sell into a down market because it is going to come back up. I know, but this time it's different. And then they do it again, and they do it again, and they do it again. I mean, I've talked about this, the Dalbar study that they do every year where they compare institutional investors to retail investors. And the institutions, and I'll make up the math, but it's something like institutions earn 6 or 7% a year for the last 20 years. And people earn 2 or 3. And the question that begs is, well, why? And it's because they always sell and buy at the wrong time. Institutions are like, we don't care. It's not our money. We'll just hang in there and let it do its thing. And you laugh at that and say, well, but that's true. They're not emotional because it's not their money, right? When it's your money, you get all freaked out. Am I ever going to get it back? Is it going to go down? Is it never coming back up? What happens if this happens? Oh, my God, that person's president. Oh, my God, that person's president. And it just goes on and on and on and on. Who do I blame? What's the problem? The world's going to end. Should I buy gold? Should I buy crypto? Should I hide under the bed? Who's the boogeyman? Et cetera, et cetera. Rates are going to go up. Rates are going to go down. The Fed's too accommodative. It's not accommodative enough. And oh my God, please stop it. Just hold on. But people, to your point, they forget. They look at housing, right? 2008 was a complete catastrophe for being overly aggressive with housing. Yet today, here we are, 14 years later, people are doing it all over again. How can I leverage up? Houses are never going to go down. They don't make any more of it. Real estate, blah, blah, blah. But like 14 years ago, don't you? No, it's different this time.
That's one thing that truly does scare me because I'm like, this looks very, very similar. And especially when you add the caveat of corporations buying houses now, which I don't think we had that.
It had started back then.
It had started in 2008.
Yeah, but it's certainly happening in mass right now.
Yeah. But there's also like when people are like, it's not about real estate. We've all been on a plane. You look out a window and you're like, there's a lot of land. There's like
I could put a house there. I
this.
could put a house there.
Especially when you see that like the internet graphics where they're like, if you took all of the people you could in the entire planet, you could fit them in this pile in the Grand Canyon.
Yeah.
and it's like not that big. But it's one of those things where people are going to get scared. I mean, every time my app pops up, my trading app, I mean, I get notifications like this app, this stock is down.
Yeah.
And are you sending me that because I'm supposed to do something about it?
Yes, they want you to do something.
They want you, yes.
Because they make money if I trade, right?
That is right. The dopamine fire in your brain. They know that the dopamine is going to hit and you're going to be like, oh, give me some trading. Got to have some trading.
The sweet, sweet trades, bro. Well, we didn't get to the numbers at all like we normally do in the first segment. Having too much fun on a Sunday morning, but we'll be right back with more It's Only Money here on Real Radio 104.1. Welcome back to It's Only Money on Real Radio 104.1 with financial advisors Tammy and Scott Brown of Edgewater Family Wealth. The website again is edgewaterfamilywealth.com. There you can get all the contact information. They got the blog. They got the financial talk with Tammy for all the fin heads out there. And currently right now, because we didn't do it during the first segment, Tammy, I hope you're ready because this is the time.
Go, go, go.
My mouse isn't working. I'm trying to stall. This is the time we do the numbers, Tammy. Here we go.
Go, go, go. Yeah, I was waiting for that. Now it's a proper Sunday.
Exactly. There's people that are like, I can't even get brunch right now until I hear the song.
No, it's
the song's on. The number song is on. Do you mind?
So speaking of pollution that we talked about in the previous segment, car sales were actually indeed lower. At the peak of the pandemic in February, we were selling about 4 million cars a month. Now we're selling about 2.8 a month.
That's weird because we weren't driving and we were selling more cars than when now we are driving.
Is that due to inventory being low
and the interest rate? Because those two industries or sectors that get hit the most, and you see the immediate effect, are housing and cars.
Your car payment went up.
Those are connected directly. And you see all the interest rate talk right now. Where is it going to go up? How much up, etc.
Yep.
And you'd see that also in the housing market now. But on the good news on that, since we also were talking about the corporates buying more houses, now the median housing price went down last month about 3%.
Nationwide.
Yeah. So now we're at $435,000, which is the median price.
$435,000.
Yes.
Nice.
And it's 3% down. Now in Orlando, it was 2% down month to month.
So down less, but still down.
Still down.
Yeah, wouldn't have guessed that.
Still down. Yeah.
That's surprising to me.
But year over year, we're 20% up.
Yeah.
So that will take time until we hit to that number. Surprisingly enough, even I went down and looked up in the state overall to see where we stand on the top 5 metro places. And can you guess what is the top or the most expensive metro area to buy in
most
right
expensive
now?
Or the highest percentage growth?
No, let's say most expensive right now.
Most expensive metro area per square foot.
Medium price, yes. It's in the south, very south.
Miami.
No, even more south. What I would say.
How do you get more south than Miami?
Key West.
Yeah, that's the one.
Is it really?
Yeah.
Wow. I was going to say Cuba. I don't know much about geography, but I don't think that's right.
I don't think last time we checked that was part of the statistics.
They have
I know something you don't.
So Key West indeed comes after it, exactly Marco Island, Naples, and then comes Miami.
So South Florida, basically.
Basically, all of it, yeah. And then there's Sarasota and Crestview and all. But all of them are down between 3% to 4%.
Okay. Seems like you think with the Keys, like you would, correct me if I'm wrong, but you look at the Keys and you look at the property values, and if I wasn't a big time investor, I'd be like, that's all worth nothing, because in 10 to 15 years, that will be underwater.
Yeah.
So that is a waste of time.
It's eventually going to be gone. Yeah. I mean, you look at like Miami's already building up all their seawalls. It's under construction now, and I just read the statistic that historically the oceans rise about a foot every 1,000 years during normal global warming, whatever it is, and now it's a foot plus every 100 years is where the pace we're on. And I'm not going to get into the reasons and all the arguments and blah, blah, blah.
Polar bears.
But it's clearly the polar bear's fault.
I think at this point, everybody's like, okay, it's happening. Now you can argue the semantics on what is causing it.
Is the argument or the conversation I'm completely uninterested in. But it is definitely happening. And what does that mean to Key West? I have no idea.
It means probably not a great investment.
And put it on stilts. Build the whole thing on stilts.
Have you ever seen Dutch houses? Like how they have to build, and it's such a low plane of water, and they actually have like floating houses that go up and down with the tides and everything. And I think Florida, I know there's places here that are already looking into doing that. I think you'll see Florida look a lot like the Netherlands by the time it's done.
That's I mean, it comes to engineering, those guys are brilliant.
Well, I mean, I think that the good news for us in Orlando is we're going to have oceanfront property soon.
Yeah. I can't wait till enjoy going to the beach of Altamont Springs.
I'm going to put a dock in my College Park house right now.
Just out in your yard.
Just put some buoys out in the street right now just to get ready. Hey, remember, red right returning. Yeah.
Yeah, just like, hey, look, they made fun of Noah too, okay?
Yeah.
Right,
You'll see. And I need 2 of each of you to get on this boat.
Forgot about that.
Yeah. How are we doing in Orlando, though? Because I know Orlando, strong market, heavy prices. Mm-hmm. And I have a house in there.
In that place.
Well, it's weird to think about it. Like, before I owned a house, I was like, these house prices need to come down. It's crazy. It's too expensive. Now I have the house, and I'm like, let's never bring them down. Let's keep them high.
Funny how your perspective changes.
It is. Yeah. I'm on the other side now. I'm Montgomery Burns in my own room.
Yes. Mustache twirling.
Exactly.
Yeah, with the thing. So, question though: Do we know what's the elevation of Orlando, if any?
A foot? I don't know. Not much.
Okay. Right. So it won't be Mount
You have
Orlando.
to get into the mountains of Dora
to
really get to the elevation
of Dora. We are sitting at a solid 82 feet above sea level.
That's better than I thought.
We're just for reference, Daytona Beach is 13 feet and Miami is only 6.5 feet above sea level.
For now.
For now, yeah. Okay. Well, that's good news. So that gives us another 200 years?
200 years.
Not for Miami.
No,
Miami's got 20 years at best.
Oh, Miami's screwed. Yeah.
Woo. All right. So speaking of that, about sinking, we are looking at the bet for the 30-year Treasury bond is sinking. Actually, the price of it.
Price is dropping.
The price is dropping.
Because rates went up.
The rates are continuing to go up, and existing ones, they're exiting. There's a cash flow out, as we talked last episode. Now we're seeing on the 20-year Treasury, it's 3.7.
That's getting pretty competitive.
Very competitive. Now we expect that to change by September 21st. We'll see how that.
Because rates are going to pop again.
Exactly. Yeah. And apart from that, for the stock market sector-wise, all of them in the negative except for energy. So it is so far been energy year. For the sector.
Those Exxon guys.
Yeah. Again, those Chevron, what we talked about.
Those mustache twirling guys.
They know what's up.
We got to blame somebody for our unhappiness.
Exactly. And on other news, now we have Apple released their iPhone 14. Aren't you guys excited?
14.
No.
Why not?
Brian tells me it's not much of an improvement.
It's underwhelming. Apple has definitely seemed to figure out at this point that this is the phone that we're going with as far as like body style, like and shape. So like unless you get the Pro model, even the chip in the lower end Apple phones are the same as the previous generation.
Exactly the same.
So get exactly the same. So to get the newer chip, you have to go to like the Pro version of that. They got rid. The only big thing is like on an Apple iPhone at the top, there's this indent of black that drives me crazy. I hate it. I don't know why I hate this so much, but it's where the cameras are and the speaker. Now they're doing this thing called the dynamic island, which that went through marketing steps to get to just the name dynamic island. And now it'll be on screen. Projected as a black dot, and it'll actually do stuff, and you can click on it now. But the biggest thing is it's going to have satellite phone capabilities.
Yeah.
So if you're out in an emergency in the desert, you'll now be able to take your iPhone. You're going to have to physically point it up to the sky and like try to hone in on a satellite.
Right.
And
while you're dying of thirst.
And it's going to connect. and then it sends your message, probably a text message, to a relay station that then that relay station has to then get it to some version of help for you, because you can't make a call with it. Because if you've seen a satellite phone, they have these huge, big, beefy antennas on them.
Yep.
And the iPhone is still not obviously going to have an antenna on. I don't think they're going to go backwards on that one.
Yeah, that's an interesting device. I mean, because I ride off-road a lot, I carry a transmitter with me. A lot of people have them on their boats and things like that. These little GPS that you just push a button and it sends out an alarm. Goodbye, cruel world sort of thing. Where your wife's like, "Oh, okay, I'll collect the life insurance now." I mean, I'll call the emergency people in about 2 hours, 3 hours. But yeah, I mean, that is an interesting development. But you're right. The antennas on my emergency transmitters are huge. They're thick. They're an inch or two long. They're just robust. But I get where they're going.
Yeah,
I understand the thinking.
I'm beginning to think and I'm worried if you own Apple stock right now. Maybe I'm crazy, but the innovation level amongst the iPhone seems to have plateaued, and this version of it is a hard plateau. Because I mean, going from the 1 to the 2 to the 4, it was like big changes.
Yeah.
The last 3 generations have been kind of lackluster, and I don't know if that's the lack of Steve Jobs being, behind the wheel anymore, or is it just like we've hit the peak?
Yeah, I mean, like any business, they're going to hit their lulls, right, where their innovation slows down. I mean, what more you think? I mean, obviously, if we could think of what the next thing was, we wouldn't be sitting here, right? That's their job.
Yeah,
is to think of
correct.
things we can't think of. But like the watch and then the wearables, they're trying to figure the wearable thing out. So far, it's just been awful. Any sunglass version of anything's just been.
That would be the next thing, though. It's the contact lens.
Yeah,
everything's bam in your eye. You don't even carry anything.
And the Google feed comes up when you look at something or maps or
That's the next level. You'd be like, "What? You got an iPhone? Yeah, I don't even have nothing in my hand.
It's
anything. Why would I bother with that?
It's in my eyeball.
Yeah,
yeah.
But then you get robbed and like, give me your eyeball.
Oh, you're Ryan Holmes. You live at
Yes.
You ordered this yesterday on. Wait a minute. What?
Spooky.
It is spooky. So yeah, I mean, but as we discussed on the last show, that's just another. What does it cost? $1,000? $1,100?
Yeah, about that.
Well, that's what I'm curious
more than 1,000
to hear when we come back from break. Is Scott the kind of guy who gets the new iPhone, being the financial advisor that he is? And we'll find that answer out when we come back with more. It's Only Money here on Real Radio 104.1. Welcome back to It's Only Money here on Real Radio 104.1. Scott Brown of Edgewater Family Wealth is here along with his right-hand man, Tammy. I'm Ryan from the Monsters, and we were discussing before we went to break, Scott. You're a smart man when it comes to finances.
That's what I tell people.
You seem to be doing okay to where you could afford it. But are you the kind of guy that rushes to get the next iPhone?
I do not.
You do not?
I do not. I'm usually like, we're on 14, right? So I have a 10.
Oh, you go that far back?
Yeah. I mean, I got to learn. First of all, you'd have to learn all the new stuff, and I don't. I'm old. I don't want to learn more stuff. I already know enough stuff. But no, I'm not a guy who needs the latest, greatest. I'm not an early adopter, which is like the people who stand in line, which I'll never understand as long as I live. Why you're standing in line?
No,
like just wait 3 days and everybody will be gone. But there's those people, and then there's like the people who wait like a year, and then I'm in that 3 to 4 year cycle, mostly because I break them. Like literally, I have a crack in my phone right now, even though I have this massive OtterBox on it that's supposed to be indestructible, and I find a way.
Wow. Yeah. Wow.
I find a way to break it.
Yeah.
But
well, you are an action man of a financial advisor as well.
I'm a man of action.
Yeah. Because you do a lot of motorcycling and dirt biking and all that kind of stuff as well.
I do my darndest to break stuff, not the least of which is my phone. But Tammy was just telling me that you can get a subscription to get iPhones. What does that mean?
Yeah, there's an Apple program they get you in this program. You pay monthly subscription, and whenever the new phone comes out, you can just exchange it. Keep doing that.
So they take like a $30 or $40 or whatever it is every month, and in forever,
basically. As long and when you have your Apple iPhone, there's more likelihood you're going to have a MacBook.
Yeah.
And then you're going to have an Apple Watch because you want the system. And you're going to have all the Apple products. You have to be in the environment now.
This is trickery.
Mhm.
I don't care for it.
And then all the subscription will pile up because
Yeah.
you need your Apple Music.
Yep.
You need your Apple
Mm.
Care if you break
Yep.
your phone.
Yep.
And that will $35 will end up being $100.
Soon you'll have an Apple Car because that's coming.
Yeah,
So that's So like now you're $1,500 a month into Apple. Oh,
with the car, yeah.
I see where they're going with this. They're not going to trick me, Ryan.
Well, from an investor standpoint, you've got to be like, this is a great idea. Constant inflow of money.
Yeah, recurring revenue stream is the thing, right? Every company, Spotify, Netflix, this is like, hey, give us a monthly check. It's predictable. Because if you're a company that sells stuff, sometimes your stuff's popular, sometimes your stuff's not popular, sometimes you sell a lot of it, sometimes you don't. And it's hard for a company to predict revenue streams if they're not quite sure. You come up with a car like the Edsel or something where it's a total bomb, right? You're like, we spent billions on producing this car and now it's a Pinto, right? Nobody buys it, they're blowing up, whatever, nobody wants to buy it. So now as a corporate leader or the accountant or whatever, you can't really predict how much revenue you're going to get. Therefore, your shareholders are uneasy. They may sell the stock. So if Apple could build a recurring revenue stream, which they kind of sort of have with the iPhone, but to your point is diminishing because a lot of us are hanging on to our phones for 3 or 4 or 5 years now because the innovations aren't that great, right?
Yeah.
We can wait 2 or 3 iterations.
And they tried to make them just like run out of battery within that 3-year period. They got trouble for that one.
Yeah. Yeah,
So-
what do they call that? Intentional something, obsolescence.
Yeah. Was it like after 2 years the battery
battery
starts? 85%.
Well, they used to do that with cars. Like they would make them. They didn't want them to last forever. Like, all right, we need to make this thing fall apart around year 6 or 7, so they come back and buy another one, right? So yeah, that's intentional obsolescence, and obviously they got in trouble for that. I don't think they're doing that anymore. So to your point, Ryan, as a shareholder, yes, you like recurring revenue. You like the idea that it's predictable, and that all of us are addicted to our Apple universe.
Mm-hmm. And it's a CFO dream, by the way.
Yeah.
They love this because they can protect the growth and they can do the market valuation for their stocks. They know how much it's worth in this number of years.
Yep.
Yeah, but on a previous episode, you said if you would just buy Apple stock as much as the phone costs, you're paying off, the phone many times over.
Yeah, I did a thing in my book where I figured out if you, instead of buying a new phone every year, you bought it every 5 years. And I don't remember the exact math. It's not like I wrote the book or something, but I don't remember the exact math. But essentially, you took that 4 years or $4,000 in this example, right, and you invested it in an Apple stock. And I think in 10 years you had 60 grand. And you only got a new phone every 5 years, but you had 60 grand, right? So if you have 60 grand and you say, well, what if I earned 5% on that 60 grand? It's $3,000 a year. You could buy 3 phones, right? So this goes back to delayed gratification, which is what we talked about last week, which is how do you make your money work for you? And people go, what does that even mean? Your money can't work. Yes, it can. That's how you become more efficient as an economic person, right? Your little business of you becomes more efficient. You say, well, I can only work so many hours. And I say, I agree. But if you take a little bit of your money and you invest it somewhere where it produces income, then it's also working for you while you're working. So now you're doubling the amount of output with the same input. So if you've invested some money and 10 years from now, you got 60 grand that pays you 5%, that's $3,000 a year. That's more stuff you can buy with that $3,000. And P.S., you got 60 grand in the bank. So it's buying Apple stock instead of Apple stuff. I mean, I challenge anybody listening right now, and whether it's Apple or Android or whatever it is, you got a drawer. I know you have it. There's a drawer in your house that has a bunch of carcasses in it, a bunch of electronics. It used to be an iPod. And then what was that thing? The Walkman. You had your Walkman. You had your 7 different kinds of broken headphones. I know. I got it. I got a big drawer, and you open it up, and there's carcasses in there, and they're different colors, and none of them. You're like, I think that cord fits. Nope, that cord doesn't fit with anything anymore. And you throw that out. So what I'm saying is maybe a little less of that and a little more investing in the stocks in the companies that are selling you that crap.
Yeah, and fun bonus, you can take the $3,000 that it gives you and just reinvest it in more money next time.
I tell you, it's an ugly cycle, isn't it?
It's endless.
But it is such a, for me, I do get excited about the latest product. Obviously, like I think most people do. You have to get excited about stuff still, though, right?
Oh, I do. I've said this many times on the show. I'm not like saying live like a hermit.
Mhm.
I'm not saying don't buy new clothes every once in a while. I'm not saying turn off all the electricity in your house and start a little fire. What I'm saying is just delay it a little bit, just a 10% to 20% change in your behavior. Because again, as I said, people will say, "Oh, why don't I just save everything and never do anything?" Well, that's not what I'm saying, Mr. Grumpy Guy. That's not what I'm saying. I'm saying just make a little change that over time will make a big change for you as you get. And this is retirement, right? This is retirement savings in a nutshell. I'm 30 years old. I can't really afford to save a lot, but if I save a little bit in 35 years when I retire, it will be a lot. I can't screw that up, right? I'm not saying live like a pauper, don't go to the movies, never leave your house, never eat in a restaurant, don't buy any gifts, wear the same underwear for 10 years. I'm not saying those things, guys, and I know a few people who are in that category. And it's not for money purposes, by the way. But I'm not saying that. I'm just saying make a small 10, 15, 20% change to your spending habits, which will make a 100% difference to you 10, 15, 20, 30, 40 years down the road.
Yeah, I especially like the phone is much like a car. Like you buy it new, you drive it off the lot. Suddenly that phone's worth a lot less. The 13 I got when it came out, but all I waited 5 months.
Yep.
Then I bought a used one.
Right.
And then and I paid $200 for it. So in my book, that's an $800 savings.
It is. You're to be applauded for that. I mean, I wouldn't do that every year, but when you do it, it's like a car's the easy one. We all know this story that car loses 20% of its value the second you drive it off the lot. Now you could argue, well, I get a warranty and it's just easier. I don't have to worry about maintenance, and I can't argue those points. Those are fair things to consider. But I think about every new car I've ever bought. I remember when I was young, I bought my first new car. It was a Mustang 5.0 liter.
Hell yeah.
I was ready to go. Thought I was all that. Was so excited. I bought it. It was new. And when you buy a new car, you like park it way out in the parking lot.
Oh, yeah.
And you don't park it near anybody. And then you're like, especially if you're a teenager, like a teenage boy, you're looking back at it. You walk a few more feet, you look back at it again.
You park backwards in it so the front's facing.
Yeah. I was that guy. And you're all excited. And then 3 months later, there's French fries in the back of it. There's wrappers. My shoes are stinking the whole thing up. Baseball cleats. Who knows what's in there at this point? I don't care anymore. So my point is that euphoria, even for a teenager, wears off pretty quickly. So if you can walk yourself through that 3-month period where you're in love with the car and you want everybody to see it and know about it and being cool and all that, and realize that in month 4 you're whipping cheeseburgers in the back of it, I think you can avoid a lot of pain financially by buying a used car to begin with.
Yeah. What is your you're who you are now, but like imagine you had to be a young man, you're buying Mustangs.
Yeah.
What was the essentially the financial like meditation you do to calm down so you don't make these kind of purchases? Is it something that you actively had to learn?
I made mistakes like everybody else. I was when I was in college and high school, and I overextended myself. I bought a car I couldn't afford. And they're more than happy to sell it to you. They're like, oh yeah, you can. What do you make, $1,000 a month? Oh yeah, you can do $950 a month. That's no problem, right? It wasn't that extreme, but it was pretty close. And I went, okay, you're gonna give me a car, cool, right? And I drove off the lot. So and then I didn't have any money, and then you're like, Mom, I had kind of short this month. She's looking at me like I got 3 heads. Well, you're the idiot, and. Then I got behind and this, that, or that, and I struggled. And then I probably did that twice with cars as a young man. And somebody would bail you out, or a parent would give you the finger and this is the last time kind of thing. And you're like, sure, it's the last time, right? But eventually it is the last time. And then you eventually learn. Now I say that some people don't learn and they continue to make those mistakes well into their 50s.
Wow. Temptation is too high.
It is tempting.
Too high. I do have a question on your thoughts on whether leasing or buying a car is better, but we can talk about that when we get back with more It's Only Money here on Real Radio 104.1. Welcome back to It's Only Money on Real Radio 104.1. We've got Tammy and Scott Brown of Edgewater Family Wealth. EdgewaterFamilyWealth.com is that website. Go there. Use the Contact Us section. Use the blog. It's all of this stuff is free. Past episodes of It's Only Money are up there for you to find. And we are in the last segment of the show. And I did have a question as we were talking about cars, because car leases do exist.
Mhm.
I have personally never used one. I have friends that do. It just always seemed for me is like, you buy the car.
Yeah.
Because the lease, you're worried you don't own it. There's a lot that always felt like more could go wrong. You got nothing to show for it at the end.
Mhm.
Are leases a sucker's game?
A little bit. I think on average, yes. Not always. You know, there's fleet leasing and things businesses do that are tax advantageous. So I can't say absolutely it's a scam, but it's the same thing we were just talking about. It's a subscription model for the car dealership.
Oh my God, it is.
It is. You just trade it in. Now, if you drove it, if you had a 15,000 mile lease and you went 17,000, well, now you're going to have to pay to give us that car back. Right. So, but it's just for the person. It's oftentimes for the person who's buying more car than they can afford. Right. They're like, I really like to have a BMW, but I can't afford a $950 a month payment, which is what it would cost me to buy it. So for $700, though, I can lease it. Right. And then they go through all the mental gymnastics to convince themselves that what they're doing makes sense. Bottom line is you're buying more car than you can afford. I would say if you see, not always, so nobody send me a nasty email, but on average, if you see somebody, especially a young person driving around in you're like, oh my God, how does that 32-year-old have that 911 turbo? That's $140,000. He's leasing it, right? Or typically it's a guy. He's leasing it probably, right? So, you know, that's people get confused. They say, oh, that guy must be really successful. He's driving a really nice car. I'm like, not necessarily, right? And as you said, that's social capital, right? I mean, we all know why dudes are driving nice cars that they can't afford. There's one reason and one reason only.
Yep. And it works too.
Yep, and it sometimes works. So I can't knock them for it. But essentially, yes, I would say a lease on average is not the optimal financial decision to make.
My next question comes from my uncle.
Uh-oh. A relation of yours?
It's a relation of mine, and he's an insane person who thinks he's a entrepreneur and a business mogul.
Did he spell entrepreneur in the email?
He did not. This is me putting words into his mouth. I know how he sees himself, and he's the kind of guy that's like he has a business, but everything to him is a write-off. You know what I mean? And I'm not I have a small business myself, and I don't go the 100 write-offs, that I probably, could make, quote unquote.
Yeah.
Do you do a lot of correction with people when it comes to things like that?
Well, we don't necessarily do taxes. We do have those conversations. I will tell you, like anybody, I know a lot of people who approach it different ways. And a lot of people are pretty aggressive, to put it nicely. And they do write off things that likely if they get audited, won't pass muster, right? And there's, there's being aggressive within the law, and then there's fraud, right?
Right.
And I would argue that some people I know are pushing the limits of that definition. If you're intentionally doing something is not, and they can prove it, how they would prove that I don't know. But if they can prove it, then there's a problem with that, right? A lot of times if you make a mistake, or you're like, oh, I thought I could write off my whatever, my car, my couch, my vacation to Switzerland or whatever, and they go, that's not really a business expense, sir. And likely you'll get off with a slap on the wrist and a fine, but sometimes you can get yourself in a lot of trouble. So I think, it's funny because they're hiring supposedly all these IRS agents. I don't know, 87,000 or whatever.
Yeah.
There's a lot of memes about it. People are all up in arms about it. But listen, I've been through audits. It's no fun. I pay my taxes like I'm supposed to. I prefer not to pay more than I should, like anybody else. But I also, someone once famously said, it's an honor to pay your taxes in this country, right? We're paying for roads, we're paying for, whatever services we're getting, and you can argue they're not worth it and they're wasteful and there's bureaucracy, and I get all that. But the truth of the matter is we live in a pretty cool country that we get to do cool stuff, and that's part of the deal. Now, can the IRS be overzealous? Can regulation be burdensome? Absolutely. So we're all trying to figure that part out. But these agents that they're hiring, it's funny because most of the people that I hear complaining about are the ones I know are cheating on their taxes.
That's what it seems like to me too. I'm like, you don't want 80,000.
There's a reason you're upset
this.
about this, and it's that you're not paying. You made $800,000 and you paid $47 in taxes. I don't think that's going to stand up.
No, and is this real?
Yeah,
because my uncle does this a lot. It's like, okay, we have tacos. Thank you so much, Brian. How's your business going? It's going well. Okay. Did you should do this. Okay, we talked business. This is a write-off.
Yes, that is people. Yes, people do that. And no, that's not a legitimate business conversation.
Oh, okay.
But again, that's hard to prove, right?
Mhm.
So if a person's writing off $3,000 worth of lunches every year and they make, $80,000 a year, and the IRS agent's like, look, this isn't even going to be worth our time, even if they are cheating, then there's a lot of that. There's a lot of that goes on. And again, I know a lot of people who are honest, hardworking Americans pay what they're supposed to pay and try not to pay a penny more. I like to believe I'm in that category, but I also know a lot of people who are writing off lunches with their nephews where they have no intention to do business with them, right? Writing off vacations, writing off vehicles, writing off all kinds of things that really don't have much to do with their business. Again, if it's within the confines of the law and it's fair and it's reasonable, I'm all for it. If you're fudging, well, you're cheating, right? And these 87,000 people they're hiring who may or may not have guns, I've heard that part too.
Yeah, that's a weird one.
Oh, really?
Yeah, they say
nerds with guns.
The memes are saying they're going to have guns. I don't really know why. But at least you'll pay if they walk in with one. So.
That was one of the more interesting interactions I had in a bar one time, and
those bar conversations.
I met a girl at a bar. And she's like, I was like, what? It's like, what do you do? She's like, I'm a tax agent. And I'm like, what does that mean? And she had a badge and everything.
Does she have a gun?
I think she did. Not on her at the bar.
Yeah,
but it was just like, you're not a real police officer. I don't know. Like,
I'm with the tax police.
I get it that you're a federally mandated person.
Yeah.
But you're a nerd cop. I don't
know. Your ledger is not looking good, sir. Please stand and be cuffed.
But they can just mess with you more than probably a beat cop. Yeah, absolutely.
Step away from that Excel sheet.
That's right. That's right. Walk away from the return, sir.
But the sense of humor was not there because I bought her a drink and I was like, this is a write-off. And she goes, it is not.
Yeah. An IRS agent with no sense of humor. Go figure.
All right. Yeah.
Yeah.
Surprise.
But it's fun. I love this segment because I can sometimes just ask personal questions, which is fun for me. So right now, I got a home, and it's a nice home, but it's worth a lot more right now, and I can pull equity from it. Now I have student loan debts.
Yeah.
And the interest rates, the first round of loans that I got, they weren't the fun government backed ones. They weren't the Pell Grants. They were
your cousin Louie.
Basically.
Yeah.
And so the interest rate on them is just insane.
Yeah.
Right? Would it be smart? And I'm saying this because I know my fiance listens to this show. Wouldn't it be smart, Scott, if we took that money in the house and then just paid off all of our debts? Is that like black and white a good thing to do?
Are you trying to use me to make a point at home, Brian?
I would never do that.
Right.
Yes, I'm doing that.
Yeah. Listen, it's not complex. It's interest rate arbitrage. If you're paying 15, 20, 30% on a credit card or a student loan, which from what you described to me is your rate's nuts.
Yes.
Then your mortgage is going to be 3 or 4%. And that's a steady rate. It's not going up, and you can pay off bad debt with better debt, if that makes sense. Absolutely, you should do that. Because the one thing I know is you're going to make your house payment, right?
Yes.
People always make their house payment. They the reason they think their home is a good investment is because they hold it for a long time, and they always make their house payment. Because you know what happens if you don't make your house payment?
You live on
the streets.
They take your house, right? So everybody's making their house payment for the most part. I don't. Again, if you're paying 4 or 5% for a mortgage, I think yours is like 3 and change, right?
3.75.
Yeah, and I don't know. You'd obviously have to take an equity line out, which may be at a slightly higher rate now. But even at 5 versus 20, I mean, that's simple math. You're 15% annually ahead. It makes it, because if you're paying 15 or 20% a year, it's darn near impossible to pay that sucker off.
Dude, I've been paying the same $3,000 loan for 15 years.
Yeah, they got to have a picture of you up somewhere in appreciation of.
I'm pretty sure Valencia State College. By the way, stop calling yourself State College. We know you're community college. But I think a wing should be built to me at this point for all the money I've put in.
Fair enough.
Did you get student loans?
Back in the day, I got a Pell Grant or two, and I did take out a couple $3,000, which was obnoxious at that time. Now it's like $200,000's nothing. Yes, I did, and it took me a while to figure out I needed to get rid of this thing one way or the other.
Yeah, it affects my credit report, but not in the most horrible way.
Mm-hmm.
But I've just And I've been sending letters about people check your credit reports. By the way, I had all kinds of identity theft. Is only way I could put this without getting too complicated.
Yeah,
and I had to send letters to all the credit reporting agencies, and that's fun.
Yeah, that's spitting into the wind too, because it takes forever, and they're like, "Oh, we didn't get that. Could you send it again?" And then you send it, 3 months go by. Well, it's over in Pat's department. Where's Pat? Oh, she's been off for a month. I don't know.
I hate Pat. Never at work.
Never at work.
But if you want to make your money work for you, Edgewater Family Wealth is where you want to go. And the website again, edgewaterfamilywealth.com. And if you want to get a hold of Tammy, there's a whole section. It's Financial Talk with Tammy. If you want to be a fin head up there, put on your market cap with a little fin on it and say hi to Tammy out there. But we will be back next Sunday with more It's Only Money. Remember, that's Scott Brown with Edgewater Family Wealth. We'll see you next Sunday on Real Radio 104.1.